And to a large extent, they succeeded, as you saw earlier on with those charts on the OIS, LIBOR-OIS spreads. They have subsequently come in and normalized to a great extent. Sorry, I didn't realize this is formatted to do this. Yeah, and as I said, it was a combination of interest rate, lending facilities, and purchase programs that really were at the focal point of the Fed activity at that point in time. Lastly, the view that capital support was also critical. Bernanke was fairly vocal on the record that they needed to backstop the financial system and ensure liquidity was available to the real economy to prevent an outright collapse and a broader scale depression. And we saw a number of activities which had never been done before. The conservatorship of Fannie and Freddie, obviously these were the sources of really the growth and the boom in the mortgage markets, and the excesses in the mortgage markets couldn't have happened really without the Fannie and Freddie having been active players in that market for a period of time and building the acceptance of holding securitized debt in mortgage assets over a period of time. And that role was taken on by Fannie and Freddie, by the private sector, and extended to the excesses we saw that led to the crisis. We had the resolution of Washington Mutual, the subsequent sale of its deposit base into JP Morgan, which has been, as we saw in the results overnight, a fairly a positive development from the standpoint of JP Morgan, and actually probably from the standpoint of the broader system, that it helped to stabilize one of the key anchor institutions in the US. We had the bailout of AIG, and then a number of negotiated acquisitions and deals across the sector. On the fiscal side, the government went into high gear very quickly. It started, I guess, under the prior President Bush. He introduced a number of plans initially targeted at the banking system, but then the auto sector subsequently as things started to go pear-shaped amongst the US auto sector. And then subsequently more programs being announced by Obama to kickstart the global economy. Just a number of them, but obviously the most high profile was the Cash for Clunkers program, which lapsed a month ago. And that obviously helped to put a floor under demand of the US economy and buy time for the private sector to take up the lead of the public sector in terms of in demand in the global market. There's still a number of initiatives to run, and that will obviously flow through over the early part of next year into the full year. I won't go through all of them, but they're in the deck, which I think will be publicly available. I would say one thing, though, is that in aggregate, the level of government support and expenditures is just unprecedented against recent histories. I mean, in the US, you have numbers of over 5% of GDP committed over the period. And a lot of other countries are not falling far behind that. And in fact, I don't have China in this chart, but if you put China in there, the number's even higher. It's up around, I think it's 7 or 8% of GDP over that period. Singapore, similar story, very quick to respond. Backstop depositors in terms of deposit guarantees. A number of credit lines, particularly targeted at the small and medium enterprises to prevent job losses across a core part of the economy, and the most dynamic part of the economies typically are the smaller businesses. They tend to generate the greatest levels of employment across most economies, and they were quick to respond to put in policies there. Corporations, let me back up one. I guess corporate governance doesn't really matter. I would argue yes, we'll come back to that a little bit later. But I think what the pressure is coming now on corporations is to basically improve transparency and strengthen governance. I don't know how many of you would recognize this individual up here. A year or so ago, probably not too many, but I think today everyone in the room would recognize Bernie Madoff. He's probably the poster boy of the breakdown of corporate governance in the financial sector. And I had to put him into this presentation for its completeness. But we also have seen a number of other issues. The creative accounting that was associated with the banking and financial sector, we saw this back in 2001 with Enron, and the collapse of Enron with the use of all sorts of funny conduits and off-balance sheet vehicles. The same thing was happening in the financial sector, and in many respects, that has come back, that skeleton has come home and haunted the sector over the course of the crisis, with a lot of those off-balance sheet commitments coming back on balance sheet, and also accounting changes coming back and making sure that those commitments are reflected on the balance sheet in the future. And I guess what's more common in Asia, we have had a few cases of CEOs who have pledged shares, disappeared. This happened in a couple of cases in Singapore. Had borrowed against those shares, and then something went pear-shaped and the CEOs just disappeared and investors were left holding the bag. So a lot of regulations or issues were raised as a result of this. I want to highlight a couple of issues here in relation to is corporate governance important to investors? And uniformly, investors say yes, it is. It's critical. And I think the crisis has done nothing but to reinforce that perception that numbers are only as good as the people behind them, ultimately. And you can see uniformly across the world, the view is that this is critical. This was a McKinsey study, incidentally, in relation to corporate governance. The next question is, how much of a premium are you willing to pay for companies with good corporate governance versus companies that don't practice good corporate governance? And you can see uniformly, everyone believes well-run, well-governed companies are worth more than those that aren't. What's interesting is the ones where the premiums are the greatest and the markets that are perceived to be of greater risk of a breakdown of corporate governance. I would guess in a year or so, if you were to look at the same survey, you're going to see the US, UK, and a lot of these other markets up there in the same regard with regards to the amount of premium that investors are willing to pay for a company with good corporate governance. Lastly, corporate governance versus financial performance. It does rank fairly importantly in relation to financial performance, either more or even equal in terms of financial performance. So people have come away and I think are now of the view that, yes, numbers are critical, but those numbers are meaningless if there's underlying fraud or underlying breakdowns in governance. I'm going to jump through a few of these slides because I know we have to keep on time. And I want to talk about Singapore a little bit. As I mentioned earlier in a comment in relation to some of the problems that were surfaced during the downturn, there were a couple of cases where there were underlying fraud in a company. The CEO had pledged shares, and all of a sudden the CEO had disappeared. And I think there was one case in particular, and I think as a result, the SEC has circled back on this and looked at that issue where people have taken control over a company, were using it as a vehicle to achieve other objectives, but where their economic interests were not necessarily fully aligned. And I think they're looking at putting in a number of initiatives to specifically address that risk that was out there in the marketplace. So listing requirements will be revisited across many jurisdictions, and I think you're going to see a tightening on the part of exchanges as a result. Institutional investors, we have a fiduciary responsibility as investors to police the companies we're investing in. And I will say I think we've done a terrible job of it. We as a firm took a look at this a number of years ago, about 5 years ago. I think we looked at, we didn't have a proxy voting policy formalized as a firm. And I sat down in part and helped to draft parts of that policy. And over time that evolved. Initially we took on a lot of the responsibilities ourselves. Over time we realized we might not be in the best position to police because we tend to look at things from a return standpoint. What is a company doing? How do we make the best risk-adjusted return, assuming everything else is taken care of? And we took the decision to appoint a proxy advisory firm to help us along in that process. And we typically default to their views on most cases. So we'll typically look at the recommendations of the proxy advisory firm. If we're comfortable, we don't do anything, and our custodians just implement those views. And I think the industry is now moving more quickly in that direction. I could think of, there are times where we will take a view that's different, and I'll give you one example. During the Bank of America Merrill Lynch deal, I cover financials, and I looked at that deal, and I felt very strongly at the time, and I spoke to a couple of other institutional investors at the time as well. And I took the view that there's no way shareholders should be voting for this. And I sort of had the same message from these other investors. They were not comfortable with the transaction. And I felt that, even though the proxy advisory firms were giving the board and the management the benefit of the doubt and supporting the deal, I decided to vote against it. And I thought enough other investors would take a view that was different than the proxy advisory firms. I was unfortunately proven wrong. The deal was consummated. Merrill led to significant problems, as you all know, in terms of the Bank of America franchise with the need for much more additional government support. And the rest is all history. But I like to think that all investors should be asking the type of questions we were sort of asking is, if it's our own money, are we comfortable with this type of a deal? And we were willing to take a view against that of the board and the management team at the time. Obviously, that's still playing itself out in the press today. As you're aware, Ken Lewis is under a lot of pressure. He's stepping down at the end of the year, but on top of that, he's now facing some legal challenges. It'll be interesting to see how this one